All right. So, as you can see from the title, wanted to do a quick live on becoming your own investment banker, what that means, what that looks like, especially in the terms of private equity fund or private equity deal. Now, I think one of the things that's happening right now is we're seeing, because of what's going on with Bitcoin, a lot of companies that are actively reshuffling their balance sheets to include cryptocurrency or at least some exposure to that market. And it's something that I think is important for small businesses. Unfortunately, as small businesses, we don't have a bunch of advisors that are going to come to us. And this is even when you have a private equity fund. We don't have a bunch of advisors that are going to come to us and say, "Hey, here are all the reasons that you should, be investing in this asset to generate more cash flow, or invest in this asset to protect yourself from inflation, or invest in this asset for tax benefits, or this other one for appreciation." And it just puts small businesses at a disadvantage because that's what investment banks do for larger businesses. And when we're going into these deals, a big part of what we want to do as private equity funds is figure out how can we maximize the return on that business. And I realized a few years ago that a big part of that is making sure that we're looking for all the places that we can leverage the company that we're in and build out a balance sheet on one end, and on the other end maximize the amount of access to credit. When it comes to access to credit, there's a deal that we're doing right now that we're exiting out of the first PEFI fund. And one of the questions came up on a deal that we're exiting is, okay, we have this debt instrument in place. Can we pass that on to the next person? And the great thing is, when you're treating your business like an investment bank, you're thinking ahead. That's the investment bank's job for all of their clients is think ahead and financially engineering things to maximize all of their options. And that's exactly what we do for the businesses in our portfolio. And so what's going to end up happening in one of the deals is that we already have a instrument in place to that will make it easier for the buyer of that business to leverage that debt that's already there and be able to go and raise the capital in addition to that. And bottom line for us is just means that we're going to be able to exit at a higher price. We're going to be able to exit at a premium over what a lot of people would get for the very same business. So those are the two things that an investment bank is doing. They're figuring out how to maximize the assets that are there, whether it's cash, other assets that are on the balance sheet. And then on the other side, they're figuring out where do we get access to for as much equity capital as is necessary and as much debt capital as is necessary, et cetera. So when we're doing this for our business, those are two perspectives that we basically want to step out of our business. A lot of people talk about, work on your business and not in your business. And this is a part of that. A part of that is stepping back from your business and putting your investment banker hat. I also call it here the financier hat. Because most people think of like investment banks as these institutions, but the financiers were the individuals that were investment banks before the actual institutions were created. And so you step back, you put on that financier hat, and you look at your business from those two perspectives. Where can I invest and diversify my business's ability to create appreciation? That's what a lot of people are doing with Bitcoin appreciation and inflation and protection. Where can I use my balance sheet to access more assets that are going to create cash flow for my business? And then where are those strategic types of acquisitions that I can do? Then on the other side, you're going to think, okay, where can I get access to credit, especially business credit? That's what the deal I was talking about. The reason that we've got this instrument in place that's for this business that we use as our way to refinance essentially our capital out of that deal. So we got that in place. It's against the business, not against an individual. And so when we have a buyer that comes and that buyer says, hey, I want to buy this business. I see you've got this instrument over here. What if, and this is also why some people think I train deal makers but I don't want to do deals with the people that have the same knowledge. And the truth is exactly the opposite. Like when you've got two deal makers that are negotiating a deal, what happens is both can creatively come up with a deal structure that makes sense for both parties. And so that's the exact case in this exit, is that there's another deal maker that looks at the deal the same way that I would and says, hey, like I see this debt instrument over here. Instead of me going and getting my own capital, whether that's from equity, whether it's from another loan, whether it's from a royalty, and then I go through the whole process of accessing that capital, and then I come over and pay that off. It'd be a lot easier if I can focus on getting the money in addition to that needs to be raised, and focus my time and effort on that. And then I can take over this loan. And when you structure things the right way, that becomes very, very valuable. So happy MLK Day. Wanted to do this quick live, and just hope that you are taking advantage of all of the amazing opportunities right now in the market. It's pretty overwhelming. There's just across the board, from the micro private equity deals to the stock market to crypto. There's just a lot of opportunities. And I definitely want to encourage you that there's a huge opportunity to buy these businesses, leverage that balance sheet to invest in some of these other appreciating assets where your company starts to get income from investments in the stock market, whether that's dividend or covered call strategies is something I like a lot, or just plain old trading. Every company right now should have a portion in Bitcoin, or crypto in general. If you're paying attention to the economy and just what's happening with the amount of money being printed, like, you got to have that kind of diversification. And so every deal that you buy becomes this asset that is really in the business of creating more assets, more cash flow, more appreciation for you, which over time starts to snowball. And I've been preaching that for a long time. I mentioned on the channel before, 2020 was really when there was a culmination of realizing, like, wow, there can become a point where in your business, if you're managing it this way, that should, it literally should should become bigger than the business itself. Because if you're taking the balance sheet and you're investing, you're taking some of the cash from that business and you're investing, that's going to grow over time. And in a lot of ways, in a lot of cases, unless you're in kind of a startup that's going to go public and has that path, it will likely eclipse, if you're making the right investment choices, the business itself. And my business has made that transition last year, where the business now is more of an investment business between the portfolio, where those other assets outside of the businesses themselves is actually a bigger business than the micro private equity portfolio. All right, we got a couple shout outs and we'll bounce out of here. Brandon G popped in. How's it going, homie? Thanks for showing up. I certainly appreciate it. The connection is a little bit slow, unfortunately. So check out the recording. The guap, what's up? Thanks for popping in. I appreciate it. Happy MLK Day, everyone. Let's celebrate by getting out there and taking some action. Brandon G asks, what was the first business you acquired? The first business was Cool Wall Street, and it was actually in the stock market. It was a stock market simulator, and we ended up. I bought it when I was in college. I was a sophomore. I ended up leaving college to run that business, and it was an amazing ride. It did eventually go out of business, which was devastating for me at 21, having quit college, had an amazing scholarship to an amazing school, and I eventually realized, like, well, if I bought that business, maybe there are other businesses that I could go out and buy. And in that case, my down payment on that deal was $3,000, and the income that was generated before it was put out of business by the dot-com bubble was closer to 300, about 278,000. Sherry, what's up? Thank you so much for popping in here. I know I've been so busy at the start of this year. I haven't had the time to do a lot of lives. Bentley, what's up, man? Let me know. Actually, Bentley is one of our members who is an actual investment banker. So thank you for popping in. Let me know your thoughts on this little overview of some of the strategies we talk a lot more deeply about in DMI. All right, Jason says, what industries, types of businesses do you avoid acquiring? A lot of what I'm avoiding right now, because I'm doing more internet-based businesses than offline businesses, but there's so many businesses that people are building, and this is a warning for any of you that are watching that are entrepreneurs and building a business from scratch. One of the things that a lot of people are focused on is becoming an influencer and building a business around their identity. And one of the downsides to that is the sellability. Now, it's great, we're actually doing some of those deals with my royalty company, Fiji Royalty. One of the reasons that we have a lot more leverage with those is that they don't have a lot of exit strategies. And if everything is built around your personality, your personal brand, and everybody wants to build a personal brand right now. But the truth is, you limit what you're going to be able to sell that business for without being attached to it. So you can do the Kylie Jenner thing where it gets so big that your name is still attached to it, but you're not in the business. But for the average person, they're going to need to be in that business when it's built off of their personal brand, and it limits you being able to sell it. So that's the number one business that I avoid acquiring right now, just because it's so difficult to kind of break that person away from the business. Yes, happy MLK Day. Awesome. Well, thank y'all so much for popping in. Hopefully you're having a great day. And